The broadcast is now starting. All attendees are in listen-only mode.
Hello, this is Jennifer Schaus, and welcome to week 4 of our government contracting webinar series. Thanks to everybody who is able to join us today, and thanks also to Jenny Clark, who's going to be discussing how to pass a DCAA audit, very important topic for government contractors. We have a series of now 8 weeks of webinars. They're all complimentary. You can download any of the ones that you may have missed on our website under the webinar section and take a look at the ones that we are currently scheduled to have. A little bit about us. We're based in downtown DC, provide various services for government contractors ranging from SBA 8A certification, capability statement assistance, proposal writing, GSA schedules, and additional services. We host various webinars, events, and seminars throughout the year. You can find those on our event section, or if you sign up for our newsletter under the Contact Us section of the website, you'll get a newsletter reminder of any events and seminars that we're hosting. A little bit about me on this slide, but more importantly, I'd rather dig into Jenny Clark, a little bit about her background, and then we'll dig into the DCAA audit topic. Jenny, thanks so much for joining us today. Excited to hear your presentation, and I'll give you the floor.
Jennifer, thanks for having me on. We've been talking just a few minutes about what we both do with lots of depth in government contracting. I've spent over 30 years in federal contracting, spent a lot of that in Huntsville, Alabama, where I learned everything that I know, and it's all been on-the-job learning, as it is for so many people. I'm in Clearwater, Florida, but you can reach me at my email, jwclark@solvability.com, and be glad to have people come and visit the website to reach out to me and find out anything more you might want to know. So solvability, my focus has always been on accounting systems and software, but I take a broad industry angle at anything GovCon. I've probably encountered it before and argued with people in a meeting. So my focus is really on offering GovCon training to help small business learn the ins and outs of government contracting. And we've got programs for online training. We've got a program called Hand to Hold and Shoulder to Cry On. We have a podcast called Florida GovCon Podcast, and I do an annual summit, and that'll be coming up in February 28th through March the 1st in Orlando. So let's talk about how to pass a DCAA audit. What I wanted to focus on is, to me, the very first hurdle with Defense Contractor Audit Agency, and that's something called an SF 1408. So what that is if a contracting officer has requested on your behalf for DCAA to do an audit, they're going to come do what's called the pre-award survey. And if you ever get stuck and you can't remember all this stuff, you could Google SF 1408, and that would probably be the fastest way to find it, or you could put DCAA audit, something like that. So we're going to talk about the requirements for passing this audit, which is it's called the DCAA compliance. We're going to talk about documenting your compliance, what you have to show in order to prove that you are compliant. And then I'm also going to let you know that the details of all of this are at dcaa.mil, and I'm going to try to tell you which pages they're on and where to look for it. So as far as this pre-award survey form, if you wanted to find this for yourself, you could go to dcaa.mil, and there's a section in there, and I want to say that it's resources, and it says something like information for contractors. That's a booklet that is probably 135 pages, something like that. If you download it, inside that section, there's a chapter on accounting system requirements that you'd be able to read through, and it'll actually have this form that's called the pre-award survey. They updated the pre-award survey, I think, in 2016. It used to be 2 or 3 pages long. It's now about 7 pages long. But what's unusual about it is most of the extra pages that they added don't apply to you as a small business. But I don't know about you, but when I get a form from any government agency, to me it's like getting a form from the IRS. The last thing I want to do is click the wrong button that's going to get me into trouble. And so what I want to do in our session today is talk to you about what the answers are supposed to be, why they're asking you that question, so you have some kind of context to feel like you know what you're doing. But you can see up there at the top, I've said Some of the questions are going to be MA, and I'll be able to tell you why they don't apply to you as a small contractor, because there's a bunch of them you get freebies on. This very first one is going to be the steps that we talk about as part of the pre-award survey. And there's basically a dozen little boxes, little questions that they're asking you about that you have to address as part of this DCAA audit. The first thing up at the very top left is generally accepted accounting principles. They call that GAAP. GAAP accounting are kind of the standards that we use in the United States. Most of the ones that you're going to run into are very basic. The first thing is there's cash basis accounting and there is accrual accounting. Our expectation is that you as a small business are going to have to do accrual accounting. Your tax return may still be cash basis, but you, as far as keeping track of your internal books and records, should be doing accrual basis. What that mainly means is that you match the expense to the accounting period it belongs to. So let me just give you a quick example. If I went out this afternoon to International Plaza, which is a great mall here in Tampa, and spent a bunch of money and came home and didn't think of that as I just spent a bunch of money in August, but I said, I spent a lot of money in October because that's when I'm going to pay the bill. That's what this whole mismatch and accrual has to be. What you're doing is saying, I spent some money, I've expensed it, I've committed it, I've invoiced it, I've done the work. That's what the basics of GAAP are. The next piece of the SF 1408 is what's called direct versus indirect cost. A direct cost is something you're doing the actual performance or delivery of the contract. So the people working on the contract, if they're doing weather station work at Kwajalein, and you've got people located on Kwajalein Island doing the weather station work, those are considered direct labor. They're actually delivering the service specific to that contract. Their travel could be direct cost. If you had subcontractors helping you on that specific contract, that's direct cost. Indirect cost is shared cost for the most part. So my utilities in the office, my telephone bill, my internet connection, my rent, utilities, training, bank fees, attorney fees, all of those things are not specific to one contract. They're just kind of support costs, things I have to spend in order to be in business. Those are called indirect cost. So direct cost specific to a contract, required in performance of the contract. Indirect cost is pretty much everything else. You have to be able to keep track of your cumulative cost by contract. And what they mean is inside your accounting system, most accounting systems are set up to keep track of all your transactions by month, and there'll be totals by year, and you can roll forward with that. What they're expecting you to be able to do is a contract might cross 2 years, so it could be an 18-month contract or a 5-year contract. They want you to be able to always show how much you spent on that contract, not just year by year, but for the entire period. And you have a responsibility to keep up with those costs and also keep track of it against your contract value or funding. So that might be they gave you a $500,000 contract that's supposed to be 18 months. They want you to be able to tell them any point in time where you are against that $500,000. Indirect cost applied consistently. I mentioned just a few minutes ago that indirect costs are support costs. The most common categories of indirect cost are fringe benefits, overhead, and G&A. Larger companies might have some variations, but those are the very basic ones. So what it says when we say indirect cost applied consistently, fringe benefits are your payroll taxes, workers' comp, leave, and paid group benefits like company paid insurance, 401k match. They want to make sure that the fringe is applied consistently so that you aren't charging one contract a greater percentage of fringe benefit than you are another. So there's some math. It's usually called an indirect rate model where you're going to calculate, here's my fringe benefits, here's my overhead, support, those are support costs on your federal contract, and here's my G&A, which are the corporate cost of running the corporation itself. And so what they're looking for is when you're creating a bid, and you'll think back to where you said, I've got somebody's pay rate and I know I'm supposed to mark it up to cover my fringe benefits, to cover my overhead and my general administrative cost. They want to make sure that you've got a mathematical way and an accounting process way to consistently calculate those rates and apply them to your contracts. The next item says under general ledger control. Well, general ledger is another one of those irritating accounting terms. General ledger means it's an account number. So even in your own home life, you probably have a budget or something that you're keeping up with at home, so you know where you're spending your money. And so if in those money calculations that you're keeping up with your household budget, one of them might be my mortgage payment, another one might be groceries, another one might be, I call it personal care when I go get my hair cut or have a massage or any of those fun things. So anyway, in your home life, you're keeping track of categories. In your business life, you're keeping up of categories of cost. When we say general ledger control, that means there's kind of a master list of accounts. You don't change them very often. They tend to be structured in a very specific way because you're a federal contractor. And when they also say general ledger control, the common practice is that account, those accounts would have account numbers associated with them. And the reason for using numbers is because it makes the order in which you present those accounts, the way that they expect to see them, all kind of fall into line. And there is a very specific common practice way that government contractors do their accounts. So if I ever run into a new company and they don't follow the structure I'm used to seeing, I'm like, okay, who did you have set up this account structure? Because it's not following any kind of standards. Oh, I had my brother, he's a CPA. Not good enough. Need a government contracting specialist. Let's talk about the next segment, which is timesheet tracking. As federal contractors, you're required to have timesheets. They should have the charge number, the number of hours. They might have a labor category associated with it, like a senior engineer or a junior programmer. You're supposed to have people fill out their timesheets every day, and at the end of the timesheet period, they should sign that timesheet. You should have, you can use paper timesheets if you have proper controls. If you use paper timesheets, they're supposed to initial a change and give a reason for the change. On the online timesheets, for them to be DCAA compliant, there should be a way that they're filling out their time every day. You can kind of prevent or audit to make sure that they are filling out on a daily basis. And there should be something called an audit trail that shows if somebody made a change to their timesheet. The other side of that is your timesheet, the hours on your timesheet by charge number, should be a way to take your payroll cost and apply it to that timesheet. So for example, if a person made $10 an hour and you have 40 hours in a regular timesheet week and they charged half to one job and half the other, you would expect to have 20 hours at $10 an hour, $200 to one charge number and 200 to the other. Imagine I could talk about this all day, so I'm just going to keep going. You should have a formal monthly closing process. So an accountant normally will know what a closing process is. It means at the end of the month, we say, hey, wait a minute. We're coming up on the 31st of August, so we're going to close the books by September the 10th. What that means is I'm going to get all my labor costs off of timesheets. I'm going to process all my payrolls. I'm going to make sure if I have any bills from my vendors or from my subcontractors that I record those bills through accounts payable, doesn't matter whether I pay them or not. I'm going to make sure if there's any adjustments or journal entries that I've got it. I'm going to record the invoices that I send out to my customer for the month. I'm going to record any cash receipts. That whole process is catching up all your transactions from an accounting standpoint, being able to balance your checkbook and balance your credit card statement and show some other reports and run through a formal closing process that says, okay, September the 10th, I've got all my transactions. Here's my final set of financial statements for my boss, the CEO, and for the bank. And it would typically be a profit and loss statement or an income statement. Those are the same thing. A balance sheet, accounts receivable aging, accounts payable aging, and some other reports. But what they're looking for is if your accounting isn't up to date within about a month, like let's say, well, just, I really haven't gotten around to closing March, you're going to fail an audit because you need to be up to date. 1 month is good, 2 months is pushing it, anything over that, I don't trust your accounting system and I don't feel like you're, putting the priority you need to. That's how the auditor's going to feel about it. On the other side of the list here, I've got exclusion of unallowable cost. So unallowable is a word that's unique to federal contracting. When federal contracting started and they came up with all of these rules, the federal contracts were largely done through research universities. Those were not-for-profits. And so this term unallowable cost is sometimes used in the not-for-profit world. Unallowable cost means here's a list of stuff you can't charge to the government. You can spend the money, it's tax deductible, has nothing to do with that, but the government says here's what I'm not paying for. I'm not paying for interest expense, not paying for entertainment, I'm not paying for contributions, gifts, sponsorships, alcohol, entertainment. Pretty much think of anything fun. They're not paying for that. So unallowable costs, there's a very specific list. If you ever need to find it, you could type this in, FAR 31.205. That'll give you the entire list of unallowable cost. The next one is tracking by CLIN. A CLIN is a contract line item. That's where the CLIN comes in. Sometimes when you'll get a contract for, say, $500,000, it'll have labor CLIN is $480,000, and that's CLIN 001A. And they might have CLIN 02B is travel for $20,000. So what they're saying is, I gave you a $500,000 contract, but my expectation is you'll track it against CLIN 1 for labor and CLIN 2 for travel. That's what they mean. However the contract is issued, that's the way you're supposed to track it. And typically, when you would have prepared your bid or proposal, you would have set it up that way. So some people will call that booking it the way you bid it and bill it the way you booked it. The next thing is the exclusion of pre-production cost. This doesn't come up very often. Most of the companies that I work with are service contractors, and they're not going to have anything called pre-production cost. But what they're really talking about is in a company that might do some manufacturing or prototypes or whatever, sometimes they'll have to have a tool or a jig or some kind of non-recurring engineering that only happens once in order to prepare for the production run. And so what they're saying is that would have to be isolated so they can tell. And yes, you could isolate it very easily by just setting up a separate charge number inside your accounting system if you had to do it. So that should be easy. Tracking of cost against contract value. I already mentioned that just a minute ago when we were talking about cumulative cost by contract. Most of the time when you get your contract, I mentioned I've given you an example of $500,000 worth of contract value. I should be able to every month say, this month I spent $10,000. Last month I had spent $40,000, so my cumulative cost is $50,000. And compare that to the $500,000 authorized. In many cases, there might be a clause in the contract that requires you to identify when you're approaching a funding limit. Sometimes it's 75 or 85%. So they do expect you to be able to keep track of that. You should also be able to trace your billings back to the accounting detail. That's a very important part of the requirement. What that means is you've had timesheets. At the end of the month, you added up all the timesheets and you said, I've got this many hours by this labor category and I'm going to create a bill. You send the bill off to the government customer. If an auditor needed to, they could grab a copy of that bill, come into your accounting system and say, I've got this invoice that covers the accounting period from July 1st through July 31st, 2017. Show me the employees that charged to this job. You should be able to go to a payroll register and to the original timesheets and show exactly how that worked. So you've got to have pretty good controls in your accounting system to be able to do that. By the way, if you're working on time and material or fixed billing rate contracts where you do have labor categories, you do have a responsibility to make it so that you can tell which employees belong to which labor categories. And you should not have a process where somebody in the billing department changes the labor category in part of that transaction just to fix the bill and get it out the door. That would be considered a violation, and that could be bad. Your accounting system should be reliable for pricing. And what they mean is if I came in and saw the same project done a second time, which I don't know, that happens very often in the business we're in, but if I was building the same thing twice, would I be able to base my pricing for the new proposal on where I was last year or what I did in previous times. So what that really means is, what's your historical record keeping like? Do you keep enough details so I could estimate from one to the other? And most companies in federal contracting would be doing that because they want to know exactly how much they spent on every particular job. The last item on this list says it should be operational or planned. Now that's very interesting. Inside the long version of the DCAA information for contractors, when you read the accounting systems requirements, it's going to say should be operational or planned. But here's the trick. Everybody I've run into lately that says DCAA came in and did an audit, they had to actually show the way that they had to prove the transactions going through their accounting software. And for that, what they had to do is really make a backup copy of their accounting software, make up some transactions and process them all the way through so they could prove to the auditor that they had an operational system. So this whole idea of being able to pass an audit with a planned system, I don't think that'll fly. That might be how it's written, but we're in a super competitive world these days. And in order to be DCAA compliance is a differentiator for you, and you don't want to have a planned system and go out to bid this. If you're not ready, don't bid it. Next page, Jennifer. There we go. Okay, so let's talk about documenting your compliance. Okay, if you can get DCAA to come and do your system audit, that would be great. But they don't do a system audit unless a contracting officer orders it. So sometimes you're going to be responding to an RFP, a request for a proposal, and it'll say in there, must have a DCAA approved accounting system. Normally you'll want to send a question in to the contracting officer when you see that come up and say, we have never been audited by DCAA. Could you order an audit for us? Which maybe they'll laugh and they won't do it. Or is there a way that we could show that we are DCAA compliant if we're down selected or if we're chosen or something like that. So you're looking for an audit letter where the auditors have come out. They'll give you a letter after it. Sometimes they won't give it to you. You have to request it from the contracting officer. And what you're looking for is it approved? And typically that approval letter is good for about 3 years. Some companies have had a hard time getting DCAA to come do an audit. And the trick that I heard on that is if you can get on Seaport E, they typically require an audit in order to be approved for that program. And it really just depends on what kind of work you're going after. Definitely if you're going after cost plus work, it's going to be a much higher priority. You could do something called self-certification, and what I call that is you take the SF 1408 yourself, you complete it, and mark all the answers. There's a section in there to say explain why, give more details, be thorough in your explanation there, and you can sign it for yourself. And a lot of times when you're getting ready to have a DCAA audit, they'll have you do that. But you can, in my opinion, do self-certification. There are people that do third-party certifications. I don't do that because I'm training people how to set up their accounting system to be DCAA compliant. I believe in independence, so I can give you some other people if you did want to have a third-party certification. But most of the time, because that can be a significant investment, anywhere from $3,000 to $10,000, I'm not going to have somebody do that unless they have a really good reason to do that. And then you would also want to get, even though it says you could have a CPA do it, you should get a CPA that understands federal contracting. The person that certifies does not have to be a CPA firm. They could just be somebody that's familiar with it. You just need to know. But the main thing to do is you'll go to dcaa.mil, and this gives the shots for where to get the download of information for contractors. That's what you'd want to take a look at. It's the one that I've highlighted. That says audit process information overview. By the way, the one that says request an audit, you can't do that. Only a contracting officer could. So I think we've covered most of our time, Jennifer. I've really enjoyed talking to people about SF 1408, and they can reach me at 256-882-6276 or at my website, www.solvability.com. I've got a number of things for free downloads there. So thanks so much, Jennifer.
Thanks, Jenny, and thanks everybody who was on the call today. It was very informative, and certainly appreciate your insight. Jenny's information is there, so for anybody that has any questions, please contact her directly. Tomorrow, which is Tuesday, we're covering contract terminations. Wednesday, teaming agreements. Thursday, contract negotiations, and Friday is FAR flow down clauses for primes and subs. Again, these are all complimentary, and you can download them on our website under the webinar section. Thanks again, Jenny. Great information.
Thanks, Jennifer.